All right, good morning, everybody. Welcome, welcome, welcome. Just getting everything lined up in here. Good morning, Bob. Good to see you. Just letting a few who are still having their audio pop up and getting turned in here. Uh, oh, I see a new name. Welcome, Danny. Glad to have you. Or maybe I haven't said hello before. If you've come before and I didn't notice. And if that's the case, I apologize. Good morning, Perry. Good to see you. Okay, I think we've got everybody in who's here at the beginning. Welcome out to the Market Watch Group Midweek Check-in. My name is Scott. Of course, I will be your host. If you missed it, yesterday we talked about selling options, covered calls, cash secured puts, naked puts. And for those of you interested in options, that will be a big part of the building blocks as we move into spreads next. So if you missed it, check out the recording. You definitely want to watch the first three before coming to spreads on Thursday. Spreads might put you in a bit of a whirlwind. Maybe not. Maybe it'll help it all come together. Anyways. All right, let's dive in. Here are the disclaimers and, of course, our agenda today, looking at the opening analysis. What do the futures tell us? Everything's looking pretty good still. I would expect you're in some bullish trades, still managing some bullish trades, might even have an entry or two still showing up based on what we have in the market right now, the strength of the market that we have right now. So certainly trying to push it. Let me know. Have you been, how's the last week or two gone? As we've seen our market posture improve, do you feel like you're able to capitalize on it now that we've had some movement here in the last couple of weeks? We'll talk about our mindset for open trades. We'll see some of the things I'm sure that people are trading in our watch list. That'll help us with both mindset for open trades as well as exploring any potential setups that may still exist. And lastly, I let you down. I did not have the video, the analytics video. I'll whip that one up today. I'll be one day late. Okay. So I know Steven's giving it to me. I get the feeling, Steven, were you a military guy? I'm getting this sense. I don't know why. Oh, see? Oh, I love it. Air Force, he said, well, thank you for your service, sir. Okay, let's dive in. Bob is Navy man. Okay, love it. Thank you as well. Thank you for sharing. I'd love to get to know you guys as we go. So what's happening? Futures are up. Another decent amount, right? The S&P is about a quarter. Same with the Dow. 0.35 for the NASDAQ. 0.12 for the Russell. Okay. How to navigate a Fed pause. Get out of cash now. Stocks and bonds tend to outperform cash when the Fed pauses compared to the 6 months before the last hike or the 6 months after the first cut. Ooh, I'm going to read this one. That's an interesting perspective. Right? And we definitely seem to be hitting that pause. All signs point to that. So what do we have? We have bonds paying 6.5%, 7%, pretty low risk. So you can get your fixed income portfolio dialed in. And the stock market is poised to be bullish. So that makes sense. What's the and it's interesting that they say the first 6 months after the first cut. When's the first cut? That's what's gonna. We know that's what people are going to start talking about as soon as we get the pause this week. Let's jump to the economic calendar. So what do we have today? Right, yesterday we had CPI numbers, and they were at 3.2, expecting 3.1. We got 3.1. Everything else came back as expected, but the year over year is actually the one that's been getting the most amount of attention. So 3.1, great. We're just a half step away, from getting back into the twos. Now, they say the target rate is 2, but let's be honest, if you took the last 20 to 25 years, I would imagine we'd be closer to 2.4, 2.5. So if we get even close to that, we're in a significantly better spot than we have been. And that's enough, again, for the Fed. In fact, you can see this morning, core PPI came back better than expected. And here, year over year, 2.5 versus 2.8. So inflation is I mean, it's all, I think, it's a funny thing because there was a lot of like, oh, the Fed was late. Oh, the Fed's terrible. And they were late. Don't get me wrong. It's a I think, reasonable criticism as far as, letting inflation get to where it got to before taking steps. But, everyone's like, oh, there's going to be a recession. There's no such thing as a soft landing. Come on, right? Got to give the Fed credit. I mean, they hit it hard at the beginning. 0.75 points, 0.75 points. Man, they just like punched us in the mouth twice. And they're like, okay, it's going to get easier from here. But it worked. Inflation's back down. Jobs, they even said, be prepared. We might lose 2 million jobs. None. We basically lost none. We added jobs during that time. Yeah, great. Here we are. Love it. Powell will speak today, Jer Bear. I sent him a text wishing him good luck. He hasn't said anything back yet, but we'll see. Tomorrow, jobless claims, sales, Friday, production, utilization. Unless there's something crazy that happens, I don't see disruptors. I see information that has more potential to continue than reverse. That's how I would put it. Give me your thoughts. How are you seeing it? Obviously, the posture is most reflective. This is our best score yet. Things have just steadily shook off whatever doubts came. And we never had that much of a doubt. You got to remember, we never really got bearish. We got to the bearish side of neutral for just 1 week. We definitely hedged a good amount. And a speculative put here or there. I never aggressively pursued puts. I don't remember anybody else in the room who was aggressively bearish. I think we just sort of took your foot off the gas, right? Just take your foot off the gas. That's what we see. I hope one of the things I issued as to everyone was a challenge to look back now at August and September and October. And, go back to your top 10 trading mistakes and then look at those 3 months and say, did I succumb to any of these that are so common? So why do they say past performance is no indicator of future performance when that is true? When Well, I mean, there's no guarantees, obviously, right? And that's very much a disclaimer, because someone could be like, you said I'd get 20%, I only got 18. Right. I mean, that's what that is. Obviously, that's just a disclaimer. I look for patterns all the time. I look for repetition all the time, because human nature is the same all the time. The There's some uncanny descriptions of psychology. A good book, if you wanted to add to your reading list, is Reminiscences of a Stock Operator. The book's over 100 years old now, I'm pretty sure. I think it was written in 1919, maybe. And it's a fictionalized biography of a guy named um, Jesse Livermore. Very, very, very successful speculator. The author is, excuse me, Edwin Lefebvre. And it's, I mean, it's very interesting because you read about, how trading existed back then, bucket shops and ticker tapes. And I mean, it's an interesting story, but there are some psychological lessons in there that are uncanny about cutting losses and letting winners run, and the psychology behind it. 100 years later, same thing. 100 years later, same thing. Um, Bob said all the chatterers harp on their 100% winners, never mention their losses, which is funny because I assess a trader only by how they talk about losses and the willingness. Most successful traders I know don't really talk about winners. What's the point of that? What's the point of that? Are you bragging? Are you calling out the market gods to feel their fury? What are you trying to do there? Most successful traders I know talk about the losers, especially when they're talking with other traders, right? Uh, 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 there's a very famous trader who said, I never learned anything making money. So, yeah, right. That's kind of our philosophy here is, if you're doing everything right and you're getting the wins, great. And then when things don't go right, that's when you're like, whoa, what's happening here? What's going on? Anyways, yeah, great discussion. Love it. Super cool. Are we still this? Yeah. There's the opening bell. Let's pop through our charts. Look at that. Scott's back on Thinkorswim. Had a chat with Charles Schwab. Error on their end. Had Scott panicked. It literally said your account does not qualify for Thinkorswim. I'm like, what? Anyways, there had to be a hiccup. We knew there would be. I mean, it's just an enormous transition of companies. So I'm not like that frustrated. One day didn't cause any issues on trades. And the group, I don't think suffered as well. So anyway, here's the SPY. I mean, look, we should all be in this. We saw this here. We saw this here. Or bullish. That was what we were looking for. We're in it. This is new highs. I'm pretty sure. What are we at? We had a 1.5. I might still go to even 1.75. We'll see. I don't think my long term is good still. We know the long term has room, right? We know the long term has room still in this trend. I actually made a very slight adjustment to a 1. I just kind of, as I looked at it, and we do that here or there. It's a quarter of a point. That's not going to change. I can't see that changing for a while. What would it take? Well, it would take because if it comes back down and hits this and bounces, that's in the trend. We would want to be careful if we saw that type of a move. Okay. So possible, looks like maybe a quarter of a point here. And where's my 1 month daily volume? No new volume as of now. And we're going to lose this volume here. So that means that we'll have 1, 2. That's a negative. Remember, that slipped my attention. That slipped my attention the first time we saw it, admittedly. I looked at this and the white candle. I thought, well, it wasn't enough. But when I looked at that was over 105% and it was a drop day, drop from here to here. That's a drop. That's sellers. So we have 2 here, 1 here, 1 here. So that means we're going to drop to a 3-1. 3-1. Right now on volume, I'm a 0.75. A 3-1, it's going to take me back to a 0.5. So what I gain on trend, and I said this was going to happen, as our long-term and short-term trends continued to strengthen, volume was likely to drop to neutral. And it's okay because we don't need volume when trend is established. The more established trend is, the less volume is required. At that point, volume would be required for us to believe that sellers had broke support levels. Otherwise, we just expect it to bounce. Find a bull market, buy the dip. That's our philosophy. Find a bull market, buy the dips. This is a trending bounce system. Can you do continuation trades? Yes, we've shown how we can do things like that. Are we looking for any kind of breakouts right now? I'm not. What do you want to break out? This whole market's moving. Just every time it pauses, you buy the dip. That's our philosophy. That's what this tells us. Major market analysis is for some reason kind of stuck. At any given time, I think that could raise a point, a quarter of a point. Especially if we see some strength out of the NASDAQ, but the Dow stayed strong too. So I don't know, that could stay right there. Sector rotation is at its maximum, which means what? We have a lot of breadth. We have 5 sectors. We have a bunch of stocks from each sector. Well, that makes us happy. The VIX is real close to its strongest. So yeah, we're in a good place, and it's going to stay that way this week. There's nothing that's happened that's given any even hint, not even a hint of something going wrong. However, with that being said, the very next thing we do is we jump in here to the VIX. And I like this. I'm gonna put my line of consolidation. This is gonna be an important line. I could draw it like this, and I'm coming across these bodies. That's pretty tight. I don't like that. It's a guaranteed to trigger. And I don't necessarily want that. But I think to myself, I was looking this way, and I might still go with that. Or I could possibly come down and just come across if I wanted something going this way. Just come a little bit across those highs. There's no, I hope everybody took a second to celebrate this yesterday. That is our first time below 12 since before the pandemic. I feel like we're like in a post-apocalyptic, like pre-pandemic. But it is. That's the lowest it's been. That's phenomenal, right? In fact, there's other things that we can talk about now. Strategies. Strategies that work in low implied volatility markets. We're doing our options class. One strategy that really is strong in a market like this is calendar spreads. Calendar spreads. That's it. Steven said our Christmas surprise VIX under 12. Oh, I'm telling you, you're not wrong. Calendar spreads is a very nice time decay strategy, positive time decay that works in a low implied volatility market. Time decay typically relies on volatility. So if you sell options, we talked about this yesterday in our options class. What is it you're selling? You're selling high implied volatility. Right now, we said there's not a lot of premiums out there because look how low the implied volatility is. I'm sure Steven's nodding his head like, yeah, it's been sucked out. You're just not getting paid as much. And so it's a little harder to like doing it. I mean, it still is viable because it's still positive time decay. Calendar spreads can offer that. So anyways, we're gonna have other things that come up, and our hope is it stays low as long as possible. Turn to calls now. He said, yeah, there you go. Love it. That's the first sign of anything that I would do. Now it's Wednesday, and if the volatility is sitting down here and you have a bunch of trades on and you just catch a sniff of anything, remember there's times where I might just put a half a hedge on for no other reason than the options are cheap. That's all it takes. I'm gonna just take a quick peek at my live quotes. I'm curious what they are right now. I'm gonna go SPY. For those of you who are not that comfortable yet, when I put a hedge on, it's a pretty formulaic thing. I go 5 weeks out in time. Right now, there is January 12th, which is 30 days. There is January 26th, or January 19th, which is 37 days. 37 days, right? So January 19th, that's the standard month. That's where I'm going to go look. And I'm going to go 5% out of the money. Look at, we're at new highs right here. 5% out of the money. So how do I do that? I take 465, we're going to round up, times 0.95. 441.75, we'll round that to 442. That's my strike price, 442. 5% out of the money, 5 weeks out in time. And it's a very cool thing, unintended consequence, not consequence, unintended benefit, is that I've started to see how much fluctuation with a standardized option. It's always the same option. Not always the same strikes, but the same parameters. So let me go to a 442. It's not the same in a bear market. Not necessarily that it will drop down there. A $1.22. Oh, you know what? They're a $1.22, $1.21. I actually thought they might be closer to like 115. Because that's about the same price, I feel like. Wasn't it about that? Didn't we get them for a $1.20 one time? I should check my records. I feel like we paid $1.20. Maybe it was $1.30. If anyone hedged sometime with me on one of these, tell me the cheapest you remember paying for one of these. Do I do it in a bull market? Yeah, this is a hedge. What are you hedging? The fact that you've got 4 or 5, 6, who knows how many bullish trades on. If all of a sudden the market gets hit with something, you're going to be scrambling to adjust. And I mean, we're constantly managing trades. We look to take profits, ease pressure profits, a quarter, a third right now. If it gets to a certain point, we tighten stops once it hits the momentum phase stage of a trade. Right. So we have targets. I mean, we have things that we're doing, but at the same time, if the market drops, would it be nice to have a hedge on? Absolutely. Now, a consolidation would take us down about 5%. That would take your out of the money option to at the money. So that would be, let me see if I can just, let me see if I can simulate this real fast. Oh, this is IBM. Sorry. SPY. January. 442. $1.23. And risk profile. So if we dropped down to the strike price, let's put that in here, 442. These options, so 10 of these options would cost me about, let's just do 4 of them, $500. 4 of these is about $500. If it dropped down to 5%, you would be up about 500% on your options. You'd be about $2,400 in profits. That's definitely a take profit for me, 5%. My goal on my first hedge would be to try to have one contract if it fell further than that, if possible. So, because this is just an early hedge. Remember that. If actually things start to turn from bullish to bearish, we're going to get a second hedge and then a third hedge. And by the time we get to the second and the third, we've probably cleaned out most, if not all, of our bullish trades. There might be a few things lingering. That's what I always try to tell people. It's like, look, the way that we trade in this style and this methodology of trading, I'm not ever concerned that the market's just going to like fall apart. It doesn't do that. It feels like it to some people, and in hindsight bias, they create a hysteria that really wasn't there. There are always things developing that give us early indications. I promise you. I pinky promise. So follow the signs, we'll be fine. What do the signs say right now? It says everything looks great, so let's be bullish. But whenever everything looks great, what am I always thinking? I'm ready to go the other way, whatever it is. VIX breaking its, breaking its line of consolidation. Do I see something weird in sector rotation where all of a sudden utilities and consumer staples shoot up? Do I see all of a sudden the Dow shoot up and the NASDAQ drop? Do I see, is there something happening that indicates the institutions are getting itchy? Because the market doesn't drop without the institutions doing something, right? You and I can't make the market drop. The institutions can. So, okay, we've had some great discussions, but I got to get to the watch list. So let me get rid of this. I hope that all makes sense. Let me know if not. So what are we doing? What is our mindset? 1, 2, 3, 4, 5. We're on day 5. Day 6 or 7, if you started back here in an anticipatory fashion as it's on support, because are we willing to anticipate in this market? Hell yes. That's what we've declared with the strength that the market's given, is a willingness to get into trades without all the confirmation. Yeah, that's right. It's close. Better reward to risk ratio when you do that. So are we in a market more conducive? Absolutely. So let's go through what we have. Ooh, Apple got shook out. What are you going to do? I made money on it, but got shook out. Did anyone stay in? Anyone still in? Adobe, it gave what it's going to give. It's now the day before earnings and starting to pull back. So like I said, could we have done it? I usually like 4 or 5, so I didn't do it. I said I liked it. I should have took it for those 3 days. Did anyone take it for those 3 days? It's nice. Aflac, I would imagine a few people are in, or AIG. Aflac's looking a little better this time than AIG. Last time AIG outperformed a little. This time Aflac's outperforming a little bit. Either one looks good and is profitable right now. This one looks a little iffier. AMD, I believe press is maybe still in this one. What's the thought? Well, we're 5 days in. We're now overbought. We're now seeing this thing stalling a little bit. Got out, but was good. Love it. Thank you for updating. Okay, so now what? Now we want it to pull back. Give us another chance. 124 to 1, anything down in this area on the pullback. So that might be where we find ourselves soon. Amazon. I didn't really love this. It turned a little bit. I don't know. I'm going to keep watching it, but it hasn't had outstanding signals. APH is overbought for sure. Nothing there for us at this point. AXP. I took it. Anyone else? A great day yesterday. A little bit of a pause today. Okay. Be patient. Be patient. What do we have? We have this. Right? If nothing else, I know I can get my stop underneath here. Now, 160, I'm 169, but I'm superstitious, so I'll go 168.99. That's $1.35. If it fell from there after the trade I had, I would be okay with that. Like even if it was a small loss, but I still feel comfortable with it. I think it looks good. I think it's ready to go still. Let's see. Boeing. Boeing is just rumbling, bumbling, stumbling. BK, also a little overbought. BX, I like the setup. I think it hasn't, you can see today it's hooked a little bit. What would my thought be? My thought would be maybe on a break of what's the high here? 113, break of 113.25. If it breaks 113.25, I think it's ready to go this way. You can see these 3 days, it's just in this little base. I don't want to necessarily, do I do calendar spreads in a bear market? No. A bear market's going to have high vol. Calendar spreads are Vega negative. So we really only want to do calendar spreads when you're at a starting point of low implied volatility. Otherwise, they're very dangerous. Great question. Yeah, this is close. I think just a little bit of a price trigger is all I need. City's looking pretty good. stabilizing, a little bit of a bull flag. We know there's a lot of strength in financials right now. Capital One Financial keeps pushing higher. Oil keeps pushing lower. Costco, how about this one? Press, I told Press, I said if it pushes up near 640, I would take everything. It's a 635.99 the day before earnings. So there you go. 621 to 634. Love it. Love it. Love it. Nice. Okay, CrowdStrike. Now what on Costco? Now we wait for earnings. Wait for a consolidation. CrowdStrike, wait for a consolidation. This is the hard part of these nice markets is right in the bull market, when we take all our profits and then it goes for a few more days, it's like, oh man, it's hard to get. You get a little antsy. Hopefully we still have a few things on. DIA looks fine today. It's kind of a pause day today. Fastenal, not going to be surprised at all to see these things start pulling back. That's a great move. It's at a new high. Now what? Now I like it on a pullback. I don't think I would want it all the way back to the here, because that's about like a 2/3 retracement. I would say about maybe like right in this little hiccup, somewhere between the high of 61.5 to 62.5. That's a great range for something like that. Gold, not a fan. Google. All right. So Google had a gap and then it just sort of eased off and gave it back. But here we are, possibly making another higher low. Shoots up, comes back. Is this going to be it? We don't know. It could go a little lower still, but if it finds support in here and then this turns and it turns out, well, then yeah, that's viable for us. That is viable for us. Gap. There's gap starting to flag, starting to show a consolidation. So depending on how it consolidates, it's not just a sure thing that I'm like, oh yeah, I'm just going to definitely take that. If it flags for a little bit and then it stabilizes and turns, then yeah, I'll probably take that. That's exactly what I'll be looking for. Let's see. There it is. Home Depot. Not yet. IBM still in it. It's still on its trajectory that it needs to be on for me. I'm less inclined to worry about the stochastics yet. I'm more focused on price, and definitely that I have this. So yeah, still in it, doing well. ICE did not take it. That one shot up. Intel. Now, I want you to notice that Intel is, in fact, I think I might have been. Nope, not yet. I was like, ooh, did I get picked off of anything yet? Nope, not yet. But what I want you to notice is Intel has crossed. Well, I like my lines here because on the last one I said, you'll notice it's still on its trajectory. This one is not all of a sudden today. You can see it's crossed to the right side of this. Bob said he took profits yesterday. I took some, right? Of course I took, in fact, we talked about this one. I took my first third right here. I think who was I talking to? Nick? No, maybe it was Nick. I think Nick. Nick, did you do this trade? He said, I'm thinking about taking some off. I'm like, yeah, definitely should. And we said, especially if it gets near this high. So when it did, I took some off. He said, so did he. Took some off that day. So yeah, now what? Now I'm okay. I'm not gonna. I don't want Apple. You see, Apple shook. This thing could do the same thing. It could definitely just pop again. But I'm starting to get close to taking more. IWM. Well, small caps are taking a little break, but they've had some strength. JP Morgan looks strong, but overbought. Same KKR. Meta is persisting better than Google. So yeah, see what happens with that one. Anyone still in any of these? Microsoft still in? We said be patient. If you remember, in entry was over here, and we said, look, it's down, but not wrong. What day was that? Monday? Yeah, we talked about it Monday, right? We said it's down, but not wrong. Be patient. Don't lose, right? We're in a 6. We have a 6. Be patient. This one looks good. It's trying to climb out of it. So Netflix, did anyone take Netflix? I did not end up taking Netflix. Working though. Nvidia is I 100% will not take until I get the higher low. What I'm seeing here is now enough. I didn't like that it was in its consolidation over here. So now it's like, okay, we got through that. I don't think that we missed any kind of trade in here. My thought is this thing's going to come down, pause, turn, higher, low, start of the new trend. That's my trade right there. Holding longer for sure, Bob. Yes. Up 87%, he said, on the Microsoft trade, holding longer. Absolutely. PDD took it. Nice signal. Great day. Eh. And that one I did not. I did not take profit after a day. Anyone do PDD? I did not take profit after a day. So sitting all of this. But the Heiken Ashies look good. So we'll see what happens. We will see. PLTR still kind of a dog. PNC was a great one. Waiting for that to pull back, give another trade. I did hold on to a piece of that one for a good while. Hughes look a little overbought. Royal Caribbean looks a little overbought, starting to pull back. Strength in consumer discretionary, but overbought conditions. Roku didn't take that one either. So we looked at Roku and Netflix. One worked, one didn't. Okay. Communication services is maybe like a chink in the there's a concern there, I would say. Here's Shopify. I think it's still viable. It gave a signal and it's just kind of sitting. Yeah, I mean that's really not a momentum candle per se, right? That's really not a momentum candle. But it does still look like it could turn. And if from here, I'm not going to be now at this point, I'm not looking at the stochastics. I'm looking at if I get a momentum candle coming out of this, I would probably still enter. I think it's still a valid setup. SMCI. I'm a little iffy on these right now, so not clamoring to take anything like that. Snap just won't take a break. Take a breath. You're gonna pass out. Relax. SPY. So we're through our opening range. And you can see we opened higher, moved a little. Now we're pulling back and we're just sitting in the range. And it's a tight range. If we break the downside of the range, I think we're going to end up back towards 463. Okay, and we'd have to break this one too, probably. That held up pretty well. If we break the upside of the range, I think that we could probably get another dollar out of this thing. I don't know. We'll see what happens. You can see we're starting to sense a little bit of buyer fatigue, right? So yeah, just be aware of that with trades, tightening stops, managing profits. Let's drop back down to 6 months. Steel didn't work. I didn't pull the trigger on steel. I was itching to. I was started looking at Steel Dynamics and US Steel. I never liked Tesla, so I'm glad I didn't do anything there. UBS, okay. UNP, it's iffy. That one was. This was still coming down. That wasn't enough for me, and then it moved up, and I'm like, I don't love that candle. I don't love this candle. I don't know. I want to trade something in industrials, and I like UNP, but here's Visa pushing new highs. Here's the VIX. Looks strong still. WMB, nope. Walmart, nope. US Steel. Oh, US Steel looks much better today. So I didn't take either of them. Steel Dynamics, not nearly as strong as I like you. I'm getting rid of this. I'll watch US Steel now so I don't get distracted. Where is WFC? Oh, do I not? Did we have WFC and I took it off? Let me put it back in here. WFC, Wells Fargo, looks good. A lot of strength in the financials, like we said. Here's basic materials. Ooh, whipped right back down. A little bit of an abandoned baby candlestick, right? Gap up. Here's this little guy all alone, gaps back down, just leaves it stranded there. Poor baby. Communication services, you can see that's what we said. There's a little bit of a stall. Energy still down, great. But financial still strong, industrial still strong, technology still strong. Staples, stable. Utilities, stable. Consumer discretionary, strong. So we have, of our 5, we have 4 real strong. We have communication services that's just kind of sputtering a little. Is there weakness there? Not even remotely. It's sputtering a little bit. Everything still looks great. However, we're starting to see things a little bit more overbought. We're starting to think, okay, this move may be running out of steam. Do we have time for one more consolidation? Yeah, you can see that. Yeah, a lot of times it's, we pushed a little higher. We're right here towards the middle. But could we see a little consolidation, then followed by one last move, the true Santa rally? Yeah, I think absolutely. I think consolidations may be short-lived right now. That's my thought. Okay, so problem is there's not a lot of new signals. There's a couple of things that could fire. Mostly what we are probably doing is managing, winding down trades, managing profits, going to your trade log and booking all these new profits into your trade log. Right? And then we wait for that consolidation and then boom, we put another round on. Why? Because we're a 6. Because there's nothing in any of these areas. We're looking for weak. We look for it. We're not looking to trade bearishly. We're looking to find weakness. If you don't look for it, you'll never see it. So we actively pursue it. And if we're actively pursuing it and not finding it, we're looking for it in the VIX. We're looking for it in the sectors. We're looking for it in the sentiment, in the relationships between the broad market indices. We're trying to find it. So if it's there, we should see it early enough to make adjustments, right? I mean, we don't believe we have a crystal ball. That's not what we think. It's not what I think. But I think we can do a pretty good job of staying objective if we look at the right things and see what's coming down the pipe. All right. Lastly, look at me. I'm pretty good on time today. Remember that we are talking about analytics, which looks like a lot. You're like, I have to do all this work, cumulatively, time frame, number of trades, systems. Like I have to. No, all you have to do is the logging. If you already started the logging from last week, The record keeping is all about interpretation. I don't have the video yet. I've already been reprimanded by Steven. I have to do 25 push-ups when I'm done. Penance. Is that the standard number? I do need to pull that down. I realized that this morning. Stephen, thank you for the reminder to pull down that the waiting room message. It's just sitting in there. That's my bad. So once you do your work here in the trade log, everything in here is done for you. Number of all of this is just spitting data and letting you see it to be like, yes, okay. Am I letting my winners run more? Well, then your average win should be getting up. Am I cutting my losses better? Your average loss should be going down. One or the other or both, and you should see your reward to risk ratio increasing. You should see your expectancy increasing. We're looking for patterns. We're looking for what successful normal looks like so that we can see when it starts to deviate and we can make adjustments. This is all about the fact that trading is a numbers game. So know your numbers inside and out. We are getting close to the end of the year. It's almost time for New Year's resolutions, and record keeping is number one on everybody's list of trading resolutions. Record keeping. Questions, comments, concerns? Remember that we are 3 days into the options foundations. We talked about selling. It's a lot, I know. We just have to keep doing it over and over. Keep talking about it. Keep asking questions. Keep playing with the model. I promise you want to get in there and play with that. Just build trades, paper trade the hell out of options. What does it do if I do a bull call instead of a bull put? What if I do this? What if I do that? And then you can always reset and then say, now I'm going to try it for real. Now that I've played around with it, let's take some trades for real. Then you can make some record keeping of that and then feel comfortable transitioning to live trading. The links should be up. So here is, if you go into, and if this, remember that this is in your emails. If you go into the schedule, you will see that right now Trading Foundations is red and X'd out, and Options Foundations is green. So this one is here and ready to go. It's in your email from yesterday as well, so it should be there, but I am going to start putting this into Discord an hour before, both as a reminder, because it'll pop up if you have Discord, it'll be like, hey, don't forget options in an hour, and it'll have the link there as well. So hopefully that'll make sure if you want to get in, you can always get in. Anything else? We're feeling good? Everyone's feeling good? I'm feeling great. This was the December I was hoping for. So yeah. It's always a little easier to process Christmas with trading going well. Feeling good. That's it. All right, guys. Have a wonderful day. I'll see you tomorrow night. Options Foundations. We are talking about spreads. Come in, hang out. It may be confusing. Press is like, there's some new things here, but he's willing to jump in because the next time it's a little easier and you understand a little more, and then all of a sudden you've added that dimension to your trading, and you will be glad that you did. All right, guys. See you tomorrow. Happy trading.